Hey everyone, happy 2022. I had mentioned that I am going to do a quick market update and answer what I think are the most popular questions that people have going into 2022 and what's going to happen with the real estate market and interest rates and all that good stuff. So I'm going to share with you some numbers, some forecasts, some data that really smart economists and forecasters, way smarter than me, have put together about what they predict is going to happen. Feel free to screenshot this. Feel free to, if you're watching this on YouTube, hit subscribe. If you have questions, you can contact me. But let's jump into one of the most popular questions, and that is, what do we think is going to happen with interest rates? Well, it is of no surprise that majority of the economists at Freddie Mac, Fannie Mae, the Mortgage Banker Association, they are predicting that interest rates are going to rise. We knew that they weren't going to stay low forever, but the primary reason is because the government is pulling out of buying mortgage-backed securities or mortgage bonds, and so whenever demand goes down for a product like a mortgage bond, that means that the price of that bond goes down and interest rates go up. So what you can see here is that the January, February, March, which is Q1 of this year, the average prediction is that the interest rates are going to be around 3.3. By the end of this year, they're projecting that the rates are going to go to 3.7. So what that means to your monthly payment, feel free to screenshot this, but on a $400,000 loan, principal and interest payment only, a 3% rate would give you a monthly payment of $1,686. If it went to 3.75, it would go to $1,852. So that's an increase of about $166 a month for that same home. That might mean that your budget goes down, because if your income doesn't increase, then that means that same $400,000 loan would be out of budget for you. So all in all, if you're thinking of buying, you need to start the conversation sooner than later, because as you wait, then you buying that home just gets more expensive. So still, interest rates in the threes are crazy low. It's the lowest that they've been in decades. So I say that kind of tongue-in-cheek because to get a 3.75, if you were to tell your parents or grandparents that, they'd probably laugh at you. Still super low, but my job is to show you guys and report the numbers. The next thing is what's happening with home prices. A lot of people sat on the sidelines in 2021 trying to figure out what is going to happen with the home prices, because we all know that they went up pretty rapidly in 2021. Will that continue? Well, they're not going to increase as fast or as much as they did in 2021, but they are still predicted to increase, which is a good thing, because we don't want a housing crash like what happened in 2008, where people bought an asset and then 1 year later the asset is worth less. That wouldn't be a good thing for the economy. But for those people who were sitting on the sidelines thinking, well, maybe I'll wait a year, see if home prices come down, they're not coming down. In fact, on average, they're predicted to still increase about 5%. So some of you are worried, well, should I buy now? Because aren't I buying at the top of the housing bubble? No, because even if you bought today, it would still increase in value in the next few years. And I have a slide showing you later on how that asset would continue to appreciate. So something to keep in mind, home prices are still expected to increase through 2022 and beyond, which I'll show you in a little bit. In fact, in 2020, they expected about 6.5 million home sales to be sold. And in 2021, we surpassed that. In 2022, they're expecting even more homes to be sold. So if you think about last year, the number of homes that were sold, they are predicting, the Fannie Mae, Freddie Mac, Mortgage Banker Association, NAR, they're all predicting more homes to be sold in 2022 than there was in 2021. Which again is good news for the economy. We don't want a housing bubble or a housing crash. This truly is based on supply and demand. There are more people looking to buy a home than there are sellers. So it is healthy appreciation. It's not like the housing crash where there was a lot of fraud being and taking place. Now, if you're a seller out there and you're thinking, is it still a seller's market? How much of a seller's market is it? The answer is yes, it's still beneficial for sellers, meaning it's the easiest that it's ever been to sell a home because it is a seller's market. And when we say seller's market, that's defined by the number of months of inventory that are on the market. So as you can see here, in the red means that we're in a buyer's market, and the green means we're in a seller's market. We were in a buyer's market from basically 2006 until 2010, and it slowly started to decrease. We've been in a seller's market, but here's what's really cool is if you're thinking of selling, this little blurb on the map is the lowest point that we've seen like since 1999. So if you've even thought about selling your house, it is the easiest time to sell. And you're probably thinking, well, what am I going to do when I sell? Where am I going to go? Keep in mind, we have a unique loan program that allows people to buy a home with zero down before you sell your house. It's a non-contingent offer. It's a great solution for people who are like, I want to capitalize on this market and get top dollar for my house, but I don't want to be stressed or pressured into buying something so quickly. Well, we've reverse engineered it. So now you can buy and move into that house and then worry about selling. It's great. It takes the stress and anxiety down, and we're happy to do it. It helps you be able to get into a home, which is what we're all about. Last, I get this question all the time. If I buy a house now, is that smart? Or am I buying at the peak, and am I going to lose money? Well, this was a forecast that was created, again, by the economists and the forecasters that showed an example based on the predictions of appreciation rates from 2021 through the end of 2026, so 5 years. It's using a purchase of $350,000 just as an example, and based on the appreciation rates in 5 years, you're still going to make over 6 figures on this home. And keep in mind, this is sales price. So oftentimes what we're seeing in a market like this is the house is listed at $300,000. You might have to go in and buy it at $325,000. This data is taking into account the $325,000. It's taking into account the recorded sales prices. So even if you bought that home for $25,000 over list, you're still going to make money based on the expected home appreciation rates. Now, we're not expecting to see crazy appreciation rates like we saw last year, but there is still healthy increase that, yes, real estate's going to continue to appreciate. It's not like it's going to be a doomsday and we start seeing homes worth less. It's not like the housing crash where mortgage lenders were writing bad loans. We weren't verifying income and we weren't verifying assets and all that kind of stuff. We are still verifying that, yes, you can afford this home, the ability to repay, all of those good things. Appraisers are still held to super strict rules and guidelines and are audited to make sure that they're using the best practice to ensure that when they assess the value of a home, it's legitimately that value and not because someone's paying them under the table. So I hope that you've enjoyed this little market update. If you have any additional questions that I didn't answer, please let me know. You can always contact me at Denise at The Mortgage Nerd. Stay tuned for more market updates, and I look forward to helping people achieve wealth through home ownership.